So let's talk about everything that you need to know about investing in gold, at least at a high level. And let's go figure out how you can take action and turn your dollars into the proverbial and literal gold. So, in the coming potential turmoil that is our global economy, many will sink into the abyss and drown financially with the rest of the economy, but I want you to swim. I'm going to run you through a few different assets, how they differ from each other, and how you can actually achieve generational wealth from them. Now, let's get into how you can actually go out and secure these assets for yourself. So let me just start off by saying gold is going to be on the move in the 2020s, and you might be getting a very good opportunity to get in right now. Though I am a long-term bull on crypto and Bitcoin in general, 2022 showed me that there's just way too many snakes in the grass for me to be aggressively buying crypto right at this second. So as a long-term hold, I get it, absolutely. And while the Federal Reserve is slowly losing power to the BRICS nations, the central bank's interest rate hikes are actually still destroying demand for risk assets like Tesla and Bitcoin. So in this module, I've naturally laid out exactly what gold is, how the markets used to work, how they work now, and why I believe the fall of the US dollar could actually pump gold extremely, absolutely, and tremendously into the future. But the question still remains, how do I buy gold and where do I get it from? So here are a few options depending on your preferences. My bias is to actually buy the gold physically, get it shipped to you, and store it. You can do that through online metals brokers, and a lot of them let you pay with either cash or crypto. I use JM Bullion or Kitco for my gold and or silver buys and sells because they offer good spot prices and premiums, so they make the sales process extremely seamless with advantageous shipping, insurance, and buyback offers. But you can also use Miles Franklin or other brokers as well. So go do your research if you want to buy some gold or silver. And remember, all gold is different purity. There's 99.99%, there's 99.99. There's a lot of different golds, there's a lot of different bars, different mints, different purities, and they all come with different premiums based on purity and rarity of the mint. The second most popular way to own gold in North America, purchase a gold exchange traded fund or an ETF through a brokerage like Charles Schwab or Robinhood. And Robinhood is not Wolfer approved. I would always tell you to go to somebody like Charles Schwab. Now, an ETF can be purchased just as easily as a share of Apple or Microsoft, but the price per share of an ETF tracks the price of an asset or a bundle of assets. So, if you're tracking my thesis on gold, then you want to make sure that you are buying gold ETFs that actually follow the spot price of gold and not just an ETF that follows a bundle of gold producers, okay? An example of these gold spot ETFs are iShares Gold Trust, Micro ETF, which has the ticker symbols IAUM, and you can even go with the GLD ETF, even though it is not pegged to gold's spot price exactly. Another example would be Granite Shares Gold Trust, which is ticker symbol BAR, and take into account their fees, expense ratio, and their assets under management though, just to be thorough and buying reputable ETF shares. You can also trade options contracts on these ETFs if you want to, but remember, options have expiration dates, time decay, and they also have strike prices that can render your position worthless. And another thing to note is that options are 100x leverage. So if you don't know how to trade options, please don't do this before you learn. Now, the last one I will mention is SPDR, and it is their gold trust. They've got about 53.5 billion under management and a 0.4 expense ratio. The obvious downside to owning an ETF as opposed to physical gold bullion is that you are actually trusting that the very same big banks with your gold who are shorting the crap out of it on the option side every single day, as well as being the institutions that have been suppressing the price for decades, but a lot of investors are able to look past this and they still do very well in gold. Now, ETFs do have the advantage of being FDIC insured, but again, you're just trusting the same government to fulfill a promise to you, the same government that is aggressively inflating the dollars that you own and suppressing the price of gold right now, and the FDIC is mainly backed by bonds and money printing, so it's effectively worthless if you lose a large sum of money, But be that as it is, we'll move on. So at the end of the day, it is your call. The ETF approach is the easiest way to buy and benefit from gold without having to store it yourself. But if you're a big crypto trader or investor like I am, then you may actually also want to consider using uphold.com. This is a platform where you can buy gold, crypto, and even stocks. And it's actually a pretty cool platform. And then second to last is going to be gold futures. This is the method of buying gold that I least recommend, because if the price of gold does start to really gain momentum, then the Fed may end up instructing the COMEX market that clears the futures contracts to throttle the volume to prevent further speculation away from the dollar. But if you want to do that, we can show you how to in our sections to come. A CFD is a contract for difference, and it is what you would normally see on pretty much any Forex exchange when you go to trade XAU USD or the gold to USD pairing. And again, this is the way that most people outside of the United States are trading gold. And I'll give you a way that you will be able to trade this too if you want to try it. Now, the last way to benefit from the future rising gold prices actually brings us back to crypto. You can actually use a crypto-friendly gold metals broker, which is Kitco, Bullion Max, or JM Bullion. And if you'd like to buy physical gold, silver, or any types of precious metals, you can actually buy it with crypto through Bullion Max or JM Bullion. So I actually highly recommend this, because when I bought all of my gold and silver, I actually bought it with crypto, and you can use stable coins, regular coins like Bitcoin, or even altcoins to pay them. So look into that, because that is the easiest way to actually take advantage of what gold could do in the future. Own that stuff physically, take ownership of it, keep it somewhere safe, and let that thing appreciate over time and create you some generational wealth. Now, I'm going to give you one more bonus way to invest in gold through crypto, and that is a blockchain coin called PAXG that tracks the spot price of gold. Okay, this coin is a stable coin that is pegged to the price of gold. So according to their website, paxos.com, each PAXG or Pax Gold token is backed by 1 fine troy ounce of gold stored in LBMA vaults in London. One thing I did want to talk about before we get off of this topic is that gold and silver prices have been suppressed. We all know that. The secondary thing to that is that all of these contracts that you are seeing on COMEX from the London exchange, from the CME, are actually over leveraged, okay? If all of the bricks of gold or silver leave the vault of the CME or London, they have to shut that part of their exchange down. So with that being said, if people are taking physical delivery of gold more than they normally are, and there's 5x the contracts in futures than they have of the physical gold in their actual vaults, then if people take all of that gold, those markets become obsolete, and those commodities markets effectively shut down the London and Chicago exchanges. Then guess who comes in to fill that void? The BRICS nations, and they open their own exchange, their own vaults, and they name their own price, because the London and Chicago exchanges would be closed if they did not have the gold in their vaults to offer out these contracts. So be very leery of this when investing in coins, contracts, or even ETFs backed by gold. Make sure that they own the gold physically, not just contracts or notes on it like USDT has with their USD backed coin that is only backed by treasury notes and not physical dollars that they actually house and store. So think about that when you're looking into any coins or you're looking into any contracts in the near future. My bias is to always have on the physical gold, because you have 100% sole and total control over it. So with all of that being said, go look into gold, go look into the ways to trade it, and figure out exactly how you want to profit from it, and we'll show you exactly how to do it inside of this training.